Morning, Mr. Michael.
Hey, morning, Sophia. Morning, Smart. How you guys doing?
We're great.
I think there's a red maroon theme going on.
I know,
this morning,
we all have a reddish maroonish thing on, huh?
Maybe it was a virtual memo or something.
It's like Christmas-ish.
There's a theme.
It was a theme. Theme for Tuesday.
Theme for Tuesday.
All right.
What do you have for us today?
Today we're just talking about a global banking survey that was done by Ernst & Young, but
Okay.
all of that in a bit. Let me just bring in Anthony Mudusi here. He's a partner at Ernst & Young, and last week they conducted a banking survey just to get consumer trends that are going on. Now, one of the things that I found very interesting was that prior to any perception that I had was that the relationship between banks and customers was always uneasy. But your survey kind of tells us something totally different. How is that?
Yeah, thank you very much for having me here this morning. And maybe a good point to start is maybe give a bit of background on how we carried out this survey. We talked to about 32,000 customers globally across 43 countries.
Yeah.
And more specifically, back here home, we talked to about slightly over 500 customers. And what we noticed across were certain emerging themes. And one of those which confirms what you're saying is that globally, the confidence of customers on their banking institutions has increased up to 33% compared to 22% in the previous year. And perhaps on a global basis, it's easy to explain that because this perhaps is at the backdrop of the recovery of the global economy.
Yeah.
But in Africa, specifically in Kenya, it was quite interesting. Customer confidence in banking institution was up by 66%. In Nigeria, this was up by 69%. And on average, across most African countries, this was up by 61% on average.
Yeah.
Basically, what you're saying is that customers are more confident with their banks. And if I was to unpack this and look at this closely back here in Kenya, why are customers really more confident about banks really back here?
Yeah.
I'm sure if this survey was perhaps put across to our parents many years ago, maybe the outcome would be different.
Totally different, yeah.
And I see two things to this. I think the banks have done a good job in the last couple of years in focusing on the customer. So we've seen banks refresh their networks.
Yeah.
We've seen some of the branches are looking quite good, quite comfortable for the customer. Banks have been innovative. They've improved the number of channels that they use to reach the customers. And a good example is the agency banking, which has brought banking closer to customer, mobile banking, and also internet banking. So customers are slightly happier and more comfortable with the bank institutions.
So banks are becoming customer-centric just to dispose of that notion that there's some suspicion between banks and the customers. Because remember back in the day, it was, hey, banks, no, those guys, I'd rather keep my money under the mattress. But now you're saying with the increased channels, now customers are getting more confident in going to the banks and actually using financial services offered by banks.
Yeah, I think the customer experience that most customers have experienced with these banks is improving. And that is reflected in how much or how well they trust their banks. Our study found out that the more customers trust the banks, the more likely they're going to be advocates for these banks. And then it makes sense then for the banks then to invest in customer experience to make sure customers are happy so that they can trust them. So it's almost like a vicious cycle. The more they trust you, the more business they give you, the more you treat them well, the more they trust you. Really.
Yeah. That we remember when a certain bank, Equity Bank, came to the market, I think they changed the way people perceived banking. They were out in the streets looking for customers. There was that rush. And we saw some of the big banks actually adopting similar strategies. Perhaps is this what is making that relationship more easy and flexible for people actually to say, hey, if my bank is actually coming out to look for me, why not? Why I should actually give them a shot?
I think you have a point, but I think it's better than that. Based on our study, I think there were 4 components that we identified that drive customer trust. I think the first one is institutional stability. The banks themselves must be stable. They must be well capitalized. Customers must have confidence that if they go to withdraw their money, when they need it, they'll get it. I think that is a given. So if that is not there, then we have a challenge, which is systemic. The second one was around how we treat our customers. And the point of equity is quite clear here. There was a segment of customers that were clearly unbanked, that nobody took notice of, and Equity embraced them and welcomed them aboard, and that was a clear segment that they chose to serve and served very well.
Yeah.
And the third one was around the fees and the rates you charge, transparency around that. I think that is important for customers. The more transparent you are around your fees levels and the more affordable they are to your customers, that does drive trust in you. And I think for that particular segment, I would imagine the proposition that Equity offered to this customer was one that was affordable. So just beyond just providing basic banking services, is also around winning the confidence and providing better experience for your customers.
It's interesting you bring in financial stability. Over the last 3 weeks, we've seen banks releasing their results, and we've seen some of them actually well capitalized and actually going ahead of some of the big banks that we used to consider about 10 years ago. How have you perceived this in terms of actually deepening even financial inclusion and actually making Kenya one of those financial hubs in East Africa?
Yes, the financial, this cuts across East Africa. Banks, the banks that have gotten their strategies right and have approached their market segments properly are doing very well. Yeah. In Kenya, majority of banks will make profits. That's not the same in markets like Tanzania, where they have a long tail of loss-making banks that are small. But largely, once the banks, what we are seeing is that as our economies grow, the opportunity for banks to grow are there. A majority of the banks are taking these opportunities, and we've seen that in the last 5 years or 10 years, where we've had new emerging banks as leaders, and you talked of Equity as one of those, perhaps that 10 years ago was a quite small bank, and now perhaps one of the largest banks locally. So just to answer your question, yes, it's an exciting time for the sector, and a majority of the banks will do well and will grow. But I think the winners of tomorrow are those that become customer-centric, the ones who are able to win the trust of their customers, the ones who are able to convert a significant number of their customers to become advocates and refer business to them and also give them more business.
Yeah. It always says that customer is king. And over the last 2 years or so, we've seen the inclusion of mobile banking as one of those channels that, first of all, banks are adopting to reduce the operating costs in terms of how much it actually costs them to offer financial services. But secondly, just how many transactions they can actually do through mobile banking. Now, banks are more or less going it by themselves now. They're trying to partner with mobile operators in terms of how they offer this. But what's the future of mobile banking in terms of deepening financial inclusion, one, and then two, making it more accessible for customers and actually building that trust?
I think you raise an interesting point. Just to step back on what we found in our survey, the Kenyan market is quite unique and interesting. I think globally, on average, 85% of customers make reference to the traditional banks as their preferred financial service provider. Well, in Kenya, this number was down to 65%, with mobile or telcos providers being cited by about 21% as their primary provider of financial services. This is an interesting scenario for the Kenyan customer, and I think what emerged here is that the Kenyan customer or the sector or the banks in Kenya are facing higher competition from the non-traditional banking providers than other markets, and the banks have responded effectively, I think, by providing the mobile banking as a channel. Yeah. The telcos are quite good retailers, and I think the difference between the telcos and the banks is that the telcos have perfected the art of retailing, especially around loyalty, around rewarding loyalty, and we've seen how the telcos do it, how they give people extra points, how they're able to do promotions, and they've brought best practice to financial services and as far as retailing is concerned, and that is driving penetration because of how they do it. I think going forward we'll also see the emergence of supermarkets, because these are other big retailers who are good at their work and are good at retailing. We'll probably also start providing some form of financial services. So the market is going to get competitive. And in Kenya, you also have the unique future of cooperatives and circles that have got a good following, have got loyal customers, and they are also growing and reinventing themselves. So the Kenyan market is quite diverse and very competitive. And this is driving the financial inclusion issue we talked about.
All right. Now, just as we finish, let me just bring in one question that I wanted to sneak in, and it had to do with the financial markets in Kenya. We've seen a lot of mergers and acquisitions in the market over the last 2 years, and as the competition authority has become more open and we actually know what's going on, what's the future in terms of M&As in Kenya? Then secondly, the new fees that are being introduced for M&A transactions.
Yeah, I think mergers and acquisition are largely a factor of growth. I think most companies enter into merger and acquisition as a form of growth. Typically, You either have a choice of growing through your existing customer base or products, or you have a choice of buying. Kenya as market is looking interesting. There are so many people looking to enter this market. We expect them to perhaps choose either to enter and create their own business from scratch or acquire. And thus, I think the merger and acquisition activity is going to increase. And we've seen this currently in the most recent private equity survey that came through. Kenya had the highest number of deals closed, 12. Or I think it's 11, probably 12 closed, slightly higher than Nigeria and slightly higher than South Africa. People are taking a good look at Kenya, and even from our own experience, we've seen a number of inquiries, number of investors visiting these markets with a bid of entering here increasing. So M&A is going to grow, so long as it doesn't distort the market, and I think that's where the approvals by the regulators come in. We will see more and more transactions.
All right. Anthony Mudusi, thank you very much for gracing our studios. All right. But smart. Now, hopefully, you look at your bank with some trust now. It's not that, hey, boss, where's my money, man?
I trust my bank since I do my things on phone.
On phone?
Yes, just like...
So long as you're the teller and
I'm
you're
the teller.
ATM.
That's the story of going to the teller and being told so many stories is not a good story.
All right.
Thank you, sir. Thank you for making
Thank
time. All right, you're watching Morning Express, 7 minutes to 7. And we'll be having a news update for you right at 7. But then, our person of interest is Senator Hassan Omar Hassan. We'll be getting to know more about him, but most importantly, talk about important national issues today.
Indeed, he's our person of interest. He's ready with us in studio. He's coming up in the next few moments. Don't go away.